Hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to the daily market analysis where we look at what happened in the market during the day and learn something from it and then plan for a better trade for the next day. So we had further sell-off, more sell-off that happened today. But interestingly, the Fyers and both institutional DEC both are buying to it. So is this correction over? Let's try to see in this analysis for December 23rd, Friday, tomorrow, 2022. Here we go. Let's get into the Nifty charts. So weekly, we know that we are at resistance. If you pull down, actually the trend line falls in here, and let's look at that later. So trend line falls in here somewhere. The breakout happened somewhere at the 88,000 zones, and had shifted it up, the trend line. And could see that Banknifty also same. Could see that it's at a resistance and down. So we're not interested in the weekly analysis. We'll do that tomorrow once the market closes. On Sunday we would have that analysis ready. So daily candle actually was a big down day. No doubt about that. Let's see the plain chart. Look at this. One of the recent biggest fall. It's more than nearly 2% of downfall, and more than that, nearly 3% of downfall the Banknifty. That's the kind of downfall that happened yesterday. And look at the candle today. It's again another wide range bearish candle. And Banknifty also, it's another wide range bearish candle. So most of has happened, but we are still at a resistance, resistance zone from where market block out on both indices, and then there is a possibility that it could take a support here and then bounce up. So change in priority bounce possibility is still there, cannot roll out, although it's not confirmed. Bollinger Bands, interestingly, has started expanding on the downside. You can see that the band has expanded downside on both these indices. And if you also the expansion has happened, so when this expansion has happened downside, the bearish bias has actually turned into bearish, real bearishness, right? Close below almost below the previous candles low also. So the case of Nifty confirmed bearishness by the Bollinger Bands is what you can see, right? Let's summarize it once again. We didn't lost too much. We lost less than 0.5%. Half of we probably lost only 1/4 of what we lost yesterday, but still it is a continuation of the bearishness. Normally when such big moves happen, sell-off stops or takes a pause and probably continue after 1 or 2 days or the day after. But the very next day, it's continuing is indication of more bearishness in the market participants. So wide range bearish candle. So intraday, the price action was some attempt to move up for there. Then it fell down 0.75% in Nifty and 1.75% more downfall. And then it took support and tried to recover, but it could not move further up because of the selling pressure. This is what happened yesterday. Not yesterday, today. Right? So downfall, a continuation of the sell-off. So probably this is some kind of panic continuation of the long unwinding bearishness that is there. People are gone long suddenly. Continuation of that. That's what happened. And once the market major participants of the institutions started buying, the market fell in, but profit booking may have come in. Sell-off panic is still there, so it could not move more than half of the drop that happened today. That's what happened. So same, it's a V-shape half, right? Half V-shape recovery is what intraday price action is all about. Let's get into additional details. Bollinger Bands clear bearishness, we saw that, and support resistance. So head and shoulder pattern breakout, we have seen that. It's still there. It has already confirmed a breakdown, but head and shoulder is more effective on a weekly charts. I already mentioned that, but the length of the head part is what the downfall that can be expected. It's almost done with mostly, so you don't need to worry too much on that. But otherwise, look at the resistances. The previous support would act as resistance now. 1862 to just 18300 rounding number. So that'll be the first resistance take out, then 18442 and then 500 zones. Second resistance is upside downside. 1870 is major previous swing low and Fibonacci 38. So and 18,000. So that zone is going to be support, and after that 17,959 is support, and then 17,839 is also support. It's a gap support, is a major support. So 17,850 would be a very major support, which you have to keep a close watch. Similar in the upside. 18 up till 18,450, 500 is taken out. No, there is no more bullishness present anywhere. Banknifty 42,740 first resistance, and then 42,961, and then 43,000 surrounding number. That's resistance upside downside. 42,364 and 42,202 and 42,000 rounding number. So the support on the downside for the Banknifty. Right, so between Banknifty support resistance, make a note of this. In the bands of bearish, we have already seen that momentum is bearish from since yesterday. Today it is continuing, and then with the further falling momentum, the sideways still not bearish. It's falling momentum sideways. Both indices on the shorter time frame. Trend is actually ADX indicator is negative bear zones and rising strength on both indices. It's slightly spiked less than 3%, 2.5%, 15.8 it is. So remember we had gone to the 12.5 something and then spiked up. 13% a single day, there was a kind of spike happened, but today it's cooled off a little bit. Future SOI was a short build up that happened in the Nifty and the Bank. Both indices. Option SOI, it's for the weekly expiry, that's for the next expiry, which is 29th, I believe. This is for the 29th. So the active trading for that will happen from tomorrow, so it may not be 11, but still for reference, take making note of that. 18,000 and 18,000 is the range. 42,000 and 43,000. So wide range for the monthly expiry. It's not the weekly expiry, it's monthly expiry. It's going to happen for the December monthly expiry, right? December 29th. So options SOI. The levels does not make much sense as of now, but for the monthly expiry, there is a 1,000-point range seen by the option writers as of now, with the high support and call writing is seen, support and resistance are seen. The call ratio is also neither bullish nor bearish, 0.76 and 0.68 in different banks, respectively. Does not give much of an idea. We'll have to see that tomorrow how does it turn out to be. Sectors, metal, auto, reality all fell greater than 1%, more than 1% of fall has happened on all this, and in the form of the two stocks that fell lesser, 0.5% less than that of fall has happened. So none of the sectors are closed green, I would say. All of them fell red, and no sector has showing any kind of short-term bullishness so far as above 60. All of them are sideways except auto and reality, which is not only it's bearish actually in the short-term in daily charts. We see the heavyweights in Fee, Kodak Bank close green. So only two major heavyweights, they close green. There is less than 1% green, but all other heavyweights are close right down, but it is less than 50%, less than 0.5%, not 50%. So in Fee, HCC Bank, Kodak Bank, these all have bearish momentum now. Right, ICC Bank and Kodak Bank. In Fee, I doubt whether it is bearish momentum. Yes, see that is to confirm. Yeah, no, Infy does not have. Infy has climbed into the sideways zone. So it's the ICICI Bank and the Kodak Bank, which is sort of bearish momentum. All other major highways out of the 5 have got sideways, which is okay. But bearish momentum for the banking stock, which is considered to be hot until a few weeks back, ICICI Bank and Kodak Bank. But ICICI Bank still not breached that support zone, I believe. Let's just look at ICICI Bank. It's still not breached that support zone. Probably it's a buy zone right now. If you look at the weekly charts, if you have a cup and handle breakout that is happening, and it is at a zone of the neckline. If this is breached, then we have trouble. If this is not breached, this is a good re-entry zone of the markets. But the momentum slightly slipped in the medium term also. We'll look at that in the weekly charts to analyze further. So today's Fyers institutional participation is very interesting. Both institutions were buying in the market, continued and short a wide range bearish. So selling happened from the retailers for sure. Panic among the retail buyers, not from the institutions. Institutions have digested the COVID news and has bought the market that has fallen down. It was a retail panic that must have brought the market today. So it means that there is a possibility of a bottom that is found at this correction. Now another worry here is that crude oil is spiking up. It's in a parallel triangle and it's less than 80, but if it is moving again above 80 and 90 and 100, then we have trouble. Looks like it may, because it's in a parallel channel bottom, so a spike up could take it to the top near to the 80-90 level, so we have to be cautious on that. As you know, looks okay. Dollar index has flat red, in the bearish momentum, but the problem is the USD INR, the currency, the rupee is not appreciating at all. 82.775 is still very close to the all-time high, multi-decade high, levels, and so that's a trouble that continues to be a trouble. So crude and rupee weakness continues to be a trouble. All the hedging instrument is spiking up, and the market is falling down, and that's what is happening. It is consolidating with some rising up at a resistance zone, trying to take out, trying to start moving before we take out the next resistance in the upside. So it's like medium term cup and handle pattern, sideways, very slow moving, no commodity, but as of now it's bullish on the short term momentum daily. Singapore exchange is flat as of now. The US index also seems to be red flat, but remember there is a descending wedge in the US index. All of them is into 500, and Dow Jones and Nasdaq, all of them are in a descending wedge, and seems to be in reversal mode in the weekly as well as the daily charts from the top of the wedge. And then you have to keep a close watch if that descent would be ferocious or not. If it turns out to be very fast, quick, big moves that happens, then our markets could reflect that, but that's what it is. Right, so we'll keep a close watch on the post market, not now. How it does in this market in the night would be reflected in post market, and accordingly can decide intraday trading strategies. Right. Major events is jobless claim data is coming in the US today. Right. Two stock picks: Havels Industries, the electrical manufacturing company, and the Aruti Industries is a truck manufacturing company. Both of them are short calls. Let's look at Aruti. Aruti Industries is down falling. There's a trend line. Every chance is there that it can come down to the trend line bottom, because the momentum is in the bearish zones confirmed, and trend is rising in the bearish zones confirmed. So definitely there is a short swing trade opportunity right here seen. Well, India is having a panel channel journey and has breached the middle of the panel channel and is heading south. Very good short opportunity, still 980 is possible, because the momentum has slipped sideways on the weekly. Remember, the entry has to be on the daily charts with tight stop losses, right? But this could give swing trades in the outside. So two topics, both in the short side for tomorrow, December 28th, Friday, 23rd, Friday, 2022. Let's just wrap up. So today it was like buy on dips, didn't work out because of selling pressure. For the fall, for the close, what the institutions have still bought today. And that's the sum, sum and summary of what happened today. Right? It did dip, but it was bought, but fell into selling pressure, and finally close red, basically. Remember, the weekly candles still suggest that it may be a breakout, and it is a retracement that is happening. But if once that resistance, weekly resistance and resistance which is broken out, is breached, then we have trouble. That's what we have to close watch. Price moving less than moving averages 2050, like that, it is going down. There was a bounce up actually today. There was a bounce up from the 50 EMA on the Nifty. If you're not seeing that, not on the weekly, it's on the daily. Yeah. So this is another view. Just have a view. This is really daily charts. So it's breached the 50 EMA, but here it has taken a support. Banknifty, right? Left side Nifty. That's why, yeah. Weekly, right? It is very close to this 23 retracement. So 18,000 is very crucial. Similarly here, 41,500, 400, 41,400 is crucial. So if that is breached and price falls down, if 17,800 is also breached, then we have trouble, because it's a weekly moving average 20 that is also breached and falls back into the channel from where it had broken out weeks back. That's what we're talking about, right? So that's how the levels has to be. Watch such levels. So crude is spiking, that's a trouble. Rupee is weakening, not strengthening basically. Trend is bearish, momentum is bearish. Short term, the view remains to be mild bearish. So now we are talking about 19,000 last week. Now we have understood that 19,000 could face a lot of resistance even if it's going up, right? So US markets resistance, as I said, you'll keep close watch. It's a short of 13% one single day. It's spiking greater than 50, so you have to be cautious on that. Levels to watch is 18,000, 18,500, and 42,000 and 43,000, right, on Banknifty. So keep the hedge positions all night to protect the capital, protect your investments, equity, etc. using hedge instruments like gold or option strategies, videos of which are available in the playlist. Check out that. So view remains my bearish for tomorrow as well. So tomorrow's close, the weekly close, and that will give more clarity, and weekly analysis will be there published on Sunday. So check out that, right? See if this study of the market has helped you in some way. Consider hitting the like button and share it with friends, colleagues. We have a few subscribers. Appreciate your help in this regard. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.